some point, all of this policy that's being proposed will be adopted, and then Katie bar the doors. Then we'll have a real asset. $1 trillion is dog shit in the institutional world. It's nothing. So the market's building in 8 Fed hikes, 25 basis points at a time. I don't think that happens. Right now, we've got a lot of uncertainty in the market. You got the Russian-Ukraine thing. You have this pandemic, COVID cases. I'm here in Manhattan. I think we're up 80% last week. Everybody's getting COVID again, but because so many people are vaxxed, it's not as traumatic an outcome. But still, it's on the unnerves investors to see people locked down in Shanghai. All that's coming. But, I think the Fed is posing with a strong stick, but a lot of the inflationary concerns, and let me give you the measures that I look at. I've got investments in like 36 private companies from insecticide, commercial kitchens, companies that service wireless charging. I'm all over the map, and they're private. So I get the tear sheets of the sales every week. I see zero slowdown right now. We can't even hire people. So if someone's going to see inflation or at least a recession first, it's going to be me, and I don't see it yet. But the reason I say that is I look at spot pricing of trucking. So you remember 90 days ago, we were up like 30% in spot trucking to get your product or service from LA to New York, just to buy any kind of transportation. Those prices have collapsed 35%. So truckers are back at work. Things are looking much better. Inflation, I think, is a transitory element, at least 50% of it. So I'm not as bearish as the pundits are, and I'm investing accordingly. Because right now, with a 2 and change 10-year and inflation at call it 6, I would never buy that bond. That's stupid. You're going to get slaughtered on that. I think it's better to stay the course on equities with your pricing power in large corporations, and that's my strategy. In inflationary times, and you can go back through 3 cycles of inflation, companies that have pricing power, that have positive business models and less debt on their balance sheet, generally perform very well because they can pass on their costs to investors and to clients that are buying their services and goods. And so I'd prefer to have that than the bonds in the same company, because I know with 100% outcome what I'm going to get paid back and when. If I have a long duration bond and inflation is 6 and I'm paying 3.2%, which is sort of the average of corporate paper right now, that's a really bad place to put capital to work. So I'd much rather go in equities. And you have to kind of take a position in looking at equities, that very often the best time to invest is when everybody's going the other way, the lemming effect, the penguins going off the cliff model. Tech has been cut in half, and yet the growth rates of the companies have not slowed at all. There's no evidence that growth rates have slowed in mega cap internet giants. Zero, even the Chinese companies. But the prices have been cut in half because everybody's got concerns for whatever reason they've got. So I'm an investor. I mean, I look at the most hated Chinese companies, and I understand why everybody hates them. It's a really bad zip code right now. But Tencent and Alibaba, my goodness, I bought those things 3 Mondays ago when some analysts called them uninvestable in the U.S., and they're up 32%, even in a crappy market. So I'm sorry. I look at growth. I look at free cash flow. I look at balance sheet. I don't listen to people talking. I look at cash flow. That's what matters. Let's talk about the blockchain and coins, Big Daddy being Bitcoin. So I don't think Bitcoin is a coin. I think it's software. I think Ethereum software, Polygon software, HBAR software, any of these projects, from Helium, Avalanche, all software. And the only reason they'll survive long term is they bring some kind of economic value to the table. So give me Polygon, which I just took an investment in on Sandeep's last deal. Basically says, look, let's aggregate transactions and push them through Ethereum at 1 transactions, cut gas fees by a huge amount, which works in India. Well, why wouldn't I invest in that? That's a great idea. I mean, there's real economic value there. Same with helium, if it's going to change telco. I like that idea. Solana, is it going to speed up blockchain? Well, Sam Bankman-Fried says, yes, why not put a 5% allocation into that? I don't know who's going to win. I got 32 positions. I only need 2 of them to work, and I've made a shitload of money. So it doesn't, I look at it in the nascent days of the internet in the 90s. Yeah, some of these are going to be pets.com, but others are going to bring tremendous value and be the Googles and the Microsofts of their generation. The whole idea that crypto is worthless, that's stupid. It's here to stay. And the only reason it's here to stay is I just a couple of weeks ago told an international speaking agency that wanted to hire me in a country I'll leave nameless. They wanted to ACH me the foreign currency, transfer it into US dollars. It was going to take 3 weeks. I said, never going to do it. Just pay me in USDC. If you can do that, I'll do the deal. And I was able to pay the agents, all the expenses, everything in 1 second. So why wouldn't stablecoin be a long-term great payment system for everybody? If I'm using it now and I have to, push back on people saying, well, I can't do that. I said, then I can't come and speak. You pay me USDC or give me another stablecoin. I don't care which one. That way I can just put it through my account and pay everybody in 2 seconds. So that's why I know that's going to stay. Plus you got bills coming from senators and yada, 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 yada. Look, there's value in these protocols. They're just software. The truth is that there's no foreign sovereign funds. There's no institutional capital. We're nowhere. We're nowhere. We're nothing. I mean, everybody's excited about Bitcoin. The fact is, sovereign funds globally, which have most of the capital and pension plans U.S. stateside, zero, nothing. So for all the excitement, we got a long way to go, and they're never going to invest in it until we get policy and we get regulated. And that's the whole investment thesis. The whole idea is you're getting ahead of the institution here. If you believe that it has economic value and you put a portfolio together, you're going to get in long before $1 trillion worth of capital comes in this market. Bitcoin itself is not $1 trillion. That's nothing. It's nothing in the constants of financial assets. The whole market, $3 trillion. That's nothing. I know it sounds like a big number. Nothing. It's nothing. You compare it to real estate or even gold, nothing. And so that's why there's an opportunity here. You don't have to be a crypto cowboy. You have to think methodically. If there's real economic value, you position yourself now, and I suggest here's how you do it. I make the assumption, I could be wrong, but in the next 12 years, crypto will be the 12th sector of the S&P. There's 11 sectors. If you look at how a sovereign fund or pension plan manages capital, let's say they have $100 billion. That's the world I work in. They allocate up to 20% in any one sector and up to 5% in any one name. So if you're really bullish, like I am on crypto, you put 20% of the operating company's capital into crypto and no more than 5% into any one coin, token, blockchain, or level 2, whatever you want to call it. And that's what I've done. I got 32 positions. I got 20% of the capital tied up. It's volatile as hell, but I'm okay with it because I make the assumption at some point all of this policy that's being proposed will be adopted, and then Katie bar the doors. Then we'll have a real asset. We'll have, I know it's really trite to say, oh, Bitcoin's less than $1 trillion. $1 trillion is dog shit in the institutional world. It's nothing.